Assalamualaikum warahmatullahi wabarakatuh. Now I want to present about the effect of the relationship between independence and return on asset of performance in State Bank of India from 2015 to 2019. My name is Nurul Izzah Binti Yaakop. My matric number is 264680. Now I want to talk about the overview of background State Bank of India. The State Bank of India is a legislative body of Indian multinational public sector bank and financial service located in Mumbai. India's State Bank was ranked 236th place in the 2019 Fortune Global 500 ranking of the world's largest companies. With a 23% market share of assets and a 25% share of the overall loan and deposit market, the nationalized bank is the largest bank in India. The State Bank of India has more bank links, such as State Bank of Bikaner and Jaipur, State Bank of Hyderabad, State Bank of Indore, and State Bank of Mysore, and the others bank. The Board of Directors by 20 members of the Central Board of Directors and is split into 7 levels, one of which is the chairman, while the Reserve Bank will be chaired. Now I want to talk about the problem statement that have in the State Bank of India. Bank Negara of India announced in its 2019 financial statement that asset returns were about 0.02% down from around negative 0.80% in the 2000 financial year. In the 2000 financial year, the fall in equity returns from 2019 to 2018 was attributed to asset returns. Bank of India analyzed the 2015 until 2019, the financial statement of the State Bank of India produced high returns on assets as loan notice business increased and credit stores decreased. Now I want to talk about the research objective in the State Bank of India. To investigate the impact of State Bank of India firm specific towards return on asset or factor performance. The second is to investigate the impact of external factor or macroeconomic factor toward return on asset. The third is to investigate the impact of firm-specific factor and macroeconomic factors towards the ROA. Now, research question. The first research question is, what are the factors affecting the firm-specific factor in relation to company performance? The second is, what are the factors affecting macroeconomics in relation to company performance? The third is, what are the factors affecting firm-specific factor and macroeconomic performance in relation to ROA? Now is the literature review. Return on asset is measure of how successful the business have compared to its overall business asset and display as a percentage. Return on investment over a time is to generate money. Based on the management study, the return on asset ratio has also shown the company's profit and the asset base. Now we show the return on asset formula, which is average total asset divided with net income. The larger the percentage is, the greater for the company. It is because the return on asset produce money for investment in investment from net profit. If the yield increase, it means that the bank management is profitable for the company. Now I want to talk the methodology that I use in the State Bank of India report. The first is internal factor. The internal factor, which is include return on asset, return on equity, current ratio, average collection period, debt to income, operational ratio, and operational margin. While the external factor, which is included unemployment rate, interest rate, exchange rate, inflation rate, market risk, and the gross domestic product, which is GDP. Now is the statistical analysis that I use. For the analysis that carried out on State Bank of India from 2015 until 2019, all data were being together for 5 years, which is divided into dependent variable, independent variable, including internal factor and external factor. Now is the model 1, which is influence with internal factor on return on asset of the company. The model 2, which is influence with internal factors on return on asset for the company. The last one is the model 3. The model 3, which is influence with internal and external factors on return on asset. Now we go to the SPSS, statistical analysis, which is descriptive statistic model 3. My individual assignment that include in the descriptive statistic model T, which is have the independent variable internal, which is current ratio, and external ratio, which is included interest rate and exchange rate. Now we go to the correlation for model 3 that have show that the current ratio, interest rate and exchange rate is the most related with the return on asset of the State Bank of India. The most significant for the independent and dependent variable is current ratio, which is 0.027, that moderately correlated with ROA of the company, while the exchange rate is the not really significant to the company of return on asset, which is exchange rate. Now we go to the model summary, model 3, which is included the R-square value and adjusted R-square value, which is the exchange rate, interest rate and the current ratio variable is the most powerful that correlated with the return on asset of the company. The R-square value shows that 0.998, which is not significant at all, but the most powerful for the return on asset, while the adjusted R-square is 0.994. Now we want to talk about the ANOVA for model 3. In the model 3 of the ANOVA table gave a meaningful value of regarded as a p-value as 0.050, which is symbolized that the mild association between the exchange rate, interest rate and the current ratio with the affected for the ROA State Bank of India. The p-value regarding result in the experiment being coupled with the component in the model 3, so the value is less than 0.1. The value is the moderately correlated with return on asset of the State Bank of India. Now we go to the coefficient model 3. The table in the coefficient table model 3 is show that the most related for return on asset State Bank of India is the variable of current ratio, interest rate and exchange rate, which show that standardized coefficient beta value for the current ratio is 0.647, interest rate 0.529, while the exchange rate is negative, which is the weakly significant relationship with the return on asset, while the p-value for current ratio is most influence to the return on asset, while the exchange rate is weakly significant related to return on asset of State Bank of India. Now we want to talk about the internal factor that have most powerful affected to return on asset of State Bank of India, which is operating margin and the current ratio, while the external factor that affected to return on asset of State Bank of India is exchange rate, interest rate and current ratio. These two variables had a significant relationship with return on asset State Bank of India. These two variables have to manage properly the variable by the company of State Bank of India. Now we go to the conclusion and recommendation for State Bank of India company. Now I want to talk the recommendation that I choose to bring in the State Bank of India, which is the current ratio is more affecting to the performance return on asset for the State Bank of India, which is the most influential, is the highest value in the T-value concept of 13.753. The current ratio should be taken into account in the performance of the company, as it can result in the performance of the company either going up or going down. The external for the State Bank of India is market risk, which is involving exchange rate and interest rate, needs to be well managed as it affects the market risk against the ROA for State Bank of India, as the value below market risk achieve positive value on State Bank of India performance. I would like to comment on my proposal to increase the share price of the company, which is the value of company stock can vary whether it wants to going up or down based on the company itself and the manage of the company. The last one is the conclusion. The State Bank of India needs to manage the state bank of the company caused by liquidity risk as well as market risk to reduce both risks from time to time within the year. Risk reduction must be done by the company so that the company can achieve high profit, and the performance of the State Bank of India can be achieved with good performance value. In addition, the State Bank of India should monitor the company share over the value of the share price from time to time, that company can make the assessment of the company performance in the financial system.